What's up, YouTube? So today we're going to talk about the 50-year mortgage. So people are talking about the 50-year mortgage, something brand new, something that people are going to start getting into, and people might see it as a good idea, people might see it as a bad idea. Me personally, will stick around for my comments on it, but we'll go into a little bit more. What's the pros and cons of it, and a little bit about that. And I mean, let's get right into it. I'm going to open up a screen as well so I can share what I'm seeing with y'all. All right, so we're going to go into it. We're going to do a little bit of investigating on it and what it actually is, the pros and cons of what we can find, and different stuff like that. All right, let's look here. All right, let's see. Do some investigations around here. All right. And this is something that you're probably going to see everywhere. So the benefits of it: lower monthly payments, increased buying power, cash flow management. I mean, I guess if you want to invest your savings elsewhere, but if you break it down, the payments on the stuff that I've seen, the payments aren't that much more. On the long term side, if you're doing this as a lifetime home and you're paying 50 years for a mortgage, the interest is going to be out of this world. So imagine you're paying 30 years for a mortgage, you're going to end up paying like $400 or something like that as for interest. Now, if you almost double that, 20 extra years on top of that, you're going to be paying close to $1 million on just interest. All right, so let's see if the interest is capped. So let's see if it's capped at a certain amount, because if it is capped or anything like that, no. So a standard 50-year mortgage would not have a capped interest rate on the term. So you're going to be paying more in total. So you're going to be paying interest. I can see how this would maybe benefit a little bit more people if the interest was capped. Let's say like you can't go over on a regular 30-year mortgage. You're looking at paying around $400,000 to $500,000 in interest on a $250 home. If it's capped at that, and the payments are going to be lower, I guess it's a little bit better. But even though once you're in a home, you want to pay it off as quick as possible, whether it be an extra $200, $300 a month going straight to the principal, that'd be the best thing to do. So the pros of it: lower monthly payments, but you're trading off a lot of money for that. But if you're putting more money to the principal each month, paying it off quicker, then I can see how that'll benefit you. So the other bad things, you're going to be staying in debt way longer. That debt's going to be on you for half a century. Are you even going to like that house at that point? If you're just getting into the 50-year mortgage for the lower payment and you don't plan on staying in that house for a while, which I think is absurd. I don't see why you'd be buying a house if you're not staying there for a while. It's like a starter house, and you and your other partner or yourself is knowing that you're going to want to get out of there. Then I can completely understand that. But you're going to build equity slower. You're going to everything's going to be slower about it. If you plan on refinancing it later, then that's another way to get out of it. But the 50-year mortgage, in my opinion, I don't think it's a good idea. That's a lot of interest that you're going to be paying for. It's not even going to benefit you, honestly. People spend a lot of money on stuff that they shouldn't. If you just cut out the fast food, or you cut out the junk food, or you cut out whatever it may be, and you put that little extra money to your house to pay it off, people pay off their house in 10 years, 15 years instead of that 30-year mortgage, just paying towards the principal. So pay extra $200, $300 towards the principal, and it comes down pretty quickly. I know with my lender, they have like a little calculator, and they're just like the Capital One. You can put in there, oh, what would I do if I pay this extra? And it's going to tell you where you're going to go. With my lender, they have the same thing, sort of. You put what you're paying already, and then you add an extra on top of it. It's going to show how many, if you were to do that every month, how much would it take off each at the end of the 30 years. That's something pretty good to look at. So in terms of 50 year, so let's see. Let's look a little bit more into this. So yeah, lower monthly payments that make home ownership more accessible, but do you really want to be stuck in all the interest? I don't know. For some people, it would be the way to go, but I honestly don't. I wouldn't do it if it was me. But hey, everybody's situation is different than mine. The main thing about me is when I'm looking at like if you're willing to do the 50-year mortgage and pay all the interest, I don't think the house is going to be worth it. You're going to be paying close to $1 million or whatever, maybe on a $250,000 house. It just doesn't make sense to me. But let's see what everybody's saying. I'm not going to go on Facebook or anything. Is the 50-year mortgage really that much crazier than a 30-year? A lot of people hated the idea. Ultimately, it's going to reward banks, mortgage lenders, home builders, while people pay far more interest. See, that's what I was talking about, paying way more interest over time. Let's say you got the house when you're fucking 30, you're going to end up finishing paying until you're 80. Imagine that. Yeah. First, let's see, 50 versus 30. And that is a big thing right there, refinancing. Like, people get into houses knowing they're going to refinance. Like, let's say they get in at a 7%, whatever it may be, and then another deal comes around. They'll take advantage of refinancing it. And I can see if you're going to do the 50-year and you know for a fact that you're going to refinance, then I can understand. You want to get those lower payments for that lower time before you ultimately refinance into a 30 or a 15-year, whatever it may be. All right, let's go back. All right. Let's see. Ultimately, it could be good or bad. I mean, you could take advantage of the lower payments and move some of your money toward investing or whatever it may be, or your other hobbies. But it's a long term cost at the end of the day when you're paying all that extra in interest. Oh, wood rated. There's not really many people talking about this or really know ins and out because it's something still new. Is anybody even offering? No, major lenders are currently offering. It's not like they will in the near future, so it's just all in the talks. But maybe they'll come out with a little bit more in a little bit. But right now, it's all thoughts, all ideas that they're just throwing around. But if you are planning on doing this when they are actually starting to roll it out, I'll take a long, hard look at the interest that you'll be paying over the 50 years and ask yourself, is that lower payment really worth it? I know some people they'll get in, they'll just pay the minimum payment each month without thinking about it or anything like that. But if it was me, I'd want to get rid of that payment as soon as possible, so I'd be paying extra each time. But I guess the final decision is completely up to you. Are you really wanting to pay 50 years in a mortgage, or would you settle or stick with a traditional 30-year? I personally would stick to the 30-year and continue to pay more and more off. That's just me. Ultimately, it's up to you. So if your budget and your lifestyle is leaning more that way, then I completely understand. But thanks for watching. What I pretty much said is everything that you can look on the internet. I mean, it's just my ideas, my opinion on it. And then what else I see here on the internet, which isn't much because it's still fairly new. But I urge everybody to go online, look a little bit more into it before they actually dive into something. Don't just when they start rolling these things out, don't just jump right towards it because you see a lower monthly payment. You'll get a lower, but in the end you're gonna be paying a ton more. You're gonna pay 100,000 more on a 50-year. So if that trade off is good for you, hey, I say do it. If you're gonna use it as a tool, then by all means you should do so. But just make sure you're smart when you're doing the 50-year investment or investment on your own property because you're going to be stuck with it. All the problems that come with it. You're going to be stuck with it. So drop your questions and stuff like that in the comments. I mean, I want to see what you guys are thinking about it as well. I know right now I'm talking to myself, but if y'all have any questions or want me to go over anything or anything like that, let me know, and we can do some streams on it. We can look into it. We can discuss it a little bit more, and we can learn more about it as well. So that's the main thing, learning more about it and understanding what it is. So if y'all got any questions, just drop in the comments and we'll look at it a little bit later.